It's time now for an in-depth look at the global markets on this Tuesday, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at QM Securities. Mr. Yu, thank you for making time this afternoon.
Good afternoon.
So a whole host of factors have hit the Korean markets this week, including the escalation of the U.S.-China trade war, and this being the first week of trading since Japan said it's taking Korea off its white list. Yesterday, the Kospi down 2%, the Kosdaq absolutely hammered, down 7%, and today they continued to fall. What's the story today?
Yes, as you said, stocks were suffering the worst week starting from beginning of the August. If you look at the U.S. market, S&P 500 and Dow Jones Industrial were tumbled by 3.2% yesterday, and the Nasdaq was plunged nearly 4%. All this is about China and U.S. Trade dispute. The tariff of 10% that we're talking about by Trump is making the Chinese government to retaliate. And if you see the yuan, it has depreciated to well above 7, clearly making Trump administration announcing the Chinese government as the currency manipulators. All these are putting a huge uncertainties in terms of the economic growth numbers. Global economic growth rates are slowing down as already. And the question mark is that this kind of dispute continuing might affect the economic slowdown to the level of a recession. If that's the case, then equity market could fall further. However, though, we think that there will be continuation of the liquidity injection by both countries. So quite aggressive monetary policy is expected. In any case, all these uncertainties still linger on. As you said, the Kospi continues to fall. Since the beginning of this month, it's down almost 7%. Kosdaq is down almost 15% since the beginning of this month. Also, Nikkei is down another 0.7% after falling 1.7% yesterday. Chinese equity market also falling quite sharply by close to 12% plus.
Well, now, as you referenced, with China for the first time since the financial crisis, the RMB trading at more than 7 to the dollar. President Trump, as he said he would, has now designated China a currency manipulator. What has China done here? And on the U.S. side, why the designation now?
Yes, as you said, the U.S. Treasury Department on Monday designated China as the currency manipulator. It is a historic move that no White House has exercised since the Clinton administrations. The Secretary Mnuchin said that under the President Trump's order, they have determined that China is a currency manipulator. As a result of this determination, Secretary Mnuchin will engage with the International Monetary Fund to eliminate the unfair competitive advantage created by China's latest actions. The question mark is obviously clearly the yuan, the currency is heavily regulated by the government of China, and it has fallen to 7 renminbi to US dollars. It is the highest number that we've seen since 2008. Clearly, this does create some price competitiveness in terms of the exporting goods. Obviously, the Chinese government is not listening to what U.S. is saying. In fact, if there continue to be a problem about selling products to U.S. through various tariffs, then China has to depend on the domestic economy in terms of growth. If you want to create domestic growth, you need currency appreciation, not depreciation. So right now, it seems that the Chinese government is not really, going with what U.S. is asking, and that's why U.S. is trying its best to put pressure on to Chinese government. After designation of this currency manipulations, they can even actually raise additional tariff further, creating the cost competitiveness to be disappeared. And also, U.S. government is talking about Fed lowering interest rate further to help this type of dispute that's happening right now. So clearly it is moving into more of a currency war in the future.
Yeah, and this undoubtedly affects other markets in the region. How does the designation of currency manipulator affect the markets of neighboring countries?
Yes, I mean, obviously it's affecting the currencies, exchange rate, and overall equity market in general. If you look at it, the PBOC, Chinese Central Bank, has fixed the yuan rate at 6.9683 today. After that, obviously, it went up again, so well above 7 against the greenback. And also, if you look at Korean won, it has depreciated to 12.15 won to dollar rate, while Japanese yen appreciated actually to 105 level. However, today it kind of rebounded to 106.7 level. You need a financial market stabilization. In order to see that kind of stabilization, what you need to see is the dollar depreciation against the global currency gradually. Right now, there's continuation of the fight between the countries in regards to trade side. We need to see dollar depreciation affecting global liquidity to increase, and if the global liquidity increase, the market can rebound. But for the time being, we don't see that. We are seeing various countries' currencies depreciating, particularly China as well as Korea. This is definitely negative news for overall market. You need to see won appreciation as well as a renminbi appreciation to see those markets go up. Also, in order for dollar to U.S. market to rebound again, we need to see some currency depreciations. So for the time being, it seems to moving opposite direction. However, though, in the future, we do think that U.S. government's effort to depreciate currency will have an effect, and that could cause a possible rebound of the global equity market.
Interesting times these days, Mr. Yu. That's all we'll have time for today, though. Thank you for sharing your insights.
Thank you very much.